Alrighty, so welcome again to our Super Savings webinar today. Just a couple of housekeeping items. If you are not speaking today or at the moment, we'd ask that you keep your mute mic, your mic muted. There we go. Um, and please use the chat for any questions that you have. There will be a live Q&A at the end, though, that we'd invite you to uh, ask those questions. And let's get started with things. So, a little bit about us at Fair Credit. Our mission is to teach individuals and families how to manage their finances wisely to improve and sustain financial well-being. And that's what we are here to do today is talking about savings and giving you some additional tips, resources on how to improve your savings, especially during these uncertain times. A little bit about our services. We offer financial coaching on a one-on-one basis. We have our debt management plans that if you're struggling to manage your debt, we can step in and help out there. Um, and you can ask us more about that. Um, we have our match savings funds, our IDA accounts that will be talked about a little bit later today, as well as our financial education. We offer different classes and workshops based off of um, various financial topics. And one of our other programs that we'll highlight at this time is our payday loan program, Credit Gazelle, that can work with you to refinance some of your payday loans to help help pay those off at a more reasonable rate. So for today's agenda, again, my name is Tal Larson, and I am a financial counselor here at Fair Credit. And want to first start off by turning some time over to Ben Stout. He's also a financial counselor here at Fair Credit. But after Ben, we will turn some time over to Melissa. And I do apologize, Melissa, that your name is misspelled there. But she has graciously taken some of her time from there over at America First Credit Union, and she will be going over some savings essentials. Then, lastly, we'll wrap up with some outreach and some question and answers. So, I will go ahead and turn the time over to Ben. And buckle in, folks. We're in for a treat today.
Thank you, Talon. I appreciate that. So to start us off, I mean, our theme today is super savings. And as hopefully at least a few of you are aware, this is Utah Saves Week. And we've been doing a lot on our social media to promote that, to talk about, saving for emergencies, the unexpected, saving as a family, saving by paying off debt, and those different topics. So keep an eye on our social media as you go throughout the week to look at those. But one of the big questions of savings, I mean, as a coach, I talk to people all the time and teach classes, and it's commonly something where people are like, oh yeah, it'd be nice to have savings. But the truth is, saving, the actual process of savings isn't always that appealing, in the moment when it's a matter of, well, do we save the money or do we spend it on something we enjoy right now in the moment, And so it comes to starting with the question of, why do we save? Why do we care about saving? What is the goal? Are we saving towards an emergency? Are we saving so that our periodic expenses, such as car registration, don't hit us all in 1 month? Or so, the Christmas budget doesn't come out of 3 paychecks, it's split between more. Are we saving for a house or a car? Some of those big purchases. Are we saving for a vacation that we've always wanted? Or maybe we're, trying to get debt paid off, or saving to go back to school, saving because we're in school and trying to pay for the next semester, or are we working towards our retirement and saving for that? And, this is an important part of saving, is recognizing, what are we saving for? What is the goal? And why does that goal matter to us? This is something I talk to my clients about on a regular basis is, Why does that goal matter to you? Why do you care about saving for emergencies? Why do you care about saving for that home or the car or, going back to school, whatever it is? And it's an important part that we have to focus on, because as we focus on what our goal is and why that goal is important to us, and I actually challenge my clients to write this down, write down their goal and why it matters to them, is that it helps us to stay focused. It makes saving more attractive in the moment. It's a lot easier to look at, maybe a daily soda and be like, I'm really not going to miss this in a year. But if I save that money from that daily soda every day for a year, or most days for a year, that's going to be a few $100s towards my goal, towards, being able to save for the down payment on that home, towards the car that you need to buy, or towards having an emergency fund. And so, that's one thing I'd encourage you guys to do, is think about the why behind that. And thank you, Talon. So, with this, we also want to establish our goals. And that's something I would challenge you to do as we're talking today. Take a moment, write down these, your top 3 to 5 major goals that you want to work towards. Make sure that those are written down so that you can review them, and with it, again, write down, why that goal is important to you. Talon, you go to the next slide. But as you write down your goals, obviously, first of all, just get it down. Part of the next part will come as you start to establish why you care about that goal. But one of the things we have to think about is, okay, so we've got a goal. Maybe it's saving for retirement. Maybe it's saving towards a car. But if we want to actually have a plan to save, if we want to have a plan of how we're going to go about savings and reaching our goal, that's the whole motivation for getting us to save. We need a plan that we can stick to, something that tells us what the next step is without having to try and figure that out every step of the way. Okay. And so now we want to take our goal and turn it into a SMART goal, because as you can see here, if you just say, I want a car, you've got 3 very different options of cars that you could buy. Okay. Next slide. And so this is where we want to turn our goals into what we call a SMART goal. This is a goal that, spells specific, measurable, achievable, relevant, and time bound. So it spells SMART. And when we set our goals to save, it is important that we give ourselves, this extra detail, that we write this down with this. This is actually something, so at least by the end of today, have it written down with why the goal is important, but then fill in the rest of this over the course of the next week, because I know some of this can take a little bit longer. But give yourself, that challenge of completing this next part over the course of the next week. But part of this, again, is, okay, specific. Well, I want to save towards a car. My wife and I actually just finished this goal a year ago. It wasn't this exact goal that you guys see on the screen, but that goal of saving towards a car. And we knew in our specific part of that goal was, we want to save for a car that can fit 3 car seats, because we knew that eventually we were going to have 3 kids, and now we do. And so we set that specific goal of, okay, these are the details. This is what will make us feel like this goal was actually accomplished, which found a lot of its root in the relevant part, which is kind of that why I was talking about. Why do you care about this goal? For us, it was a matter of, we want a vehicle that can transport our entire family together. We don't want to have to take 2 vehicles everywhere. That would not only be, obnoxious, but very inefficient and costly. And so, it helped us define our specific. But then it was also important that we establish a measurable. When we're saving for a goal, we need to have, a form of measurement, which is kind of easy, because it's like, okay, well, we want to save, we can see how much we are saved so far, but when will we know when that goal is achieved? For us, we were actually saving to pay cash for a used car. And, we knew that we had reached that goal when we had set aside, in our situation, $8,000 to pay cash for a used car, which we didn't end up needing the whole amount for, but we had that measurable, knowing what we were aiming at to work towards, and it pushed us to make sure that we saved every penny that we could to get to that goal as quickly as we could. And that comes to the next part of achievable. I mean, everybody's in a different situation. As we're learning to save, as we're establishing our plan of how do we save, we want to make sure that it is achievable. For us, knowing that we wanted sorry guys, I accidentally muted myself for a second. Knowing that we wanted a budget of having $8,000 towards a used car, we knew that we had to start sooner. We had to basically start working towards that after we had our second kid in order to make that an achievable goal. And this is an important part, because the last thing you want as you're starting to learn to save, or if you're already used to saving but trying to figure out how to improve saving, you want to make sure that it's something that you can achieve, that you can feel like you are getting somewhere, rather than getting discouraged because you don't feel like you're making progress. And then we've already talked about that why behind the goal, but then also setting that time bound. I can tell you of countless experiences, personal experiences, where I've set goals, some with time bound, some with a deadline, some without. And I always accomplish more when there's a deadline involved. And part of that, for me at least, is to have someone to help you stay accountable to that deadline. Someone that you can report to, or that, that you have to show whether or not you've kept to that timeline, because it really pushes us to make sure that we don't push it off. And in that moment say, oh, well, yeah, I want to save for a home, but that's like 3 years down the road. And it's okay if I don't do as much towards that goal now. But realistically, it's going to be harder to catch up if we don't stick to the plan. Next slide, Talon. And so again, as part of that accountability, as we create these SMART goals, these plans that give us an idea of what we need to be doing to achieve the goal, one thing I'd encourage you guys to do is come up with some sort of chart, something that you can mark off as you're making progress towards your goal, so that you can see your progress. Because for me, at least, and a number of my clients, seeing the progress, seeing the bank account increase, seeing, if you need a little chart on your fridge, do it. There's a reason that works with kids. It also works with adults more than we probably want to admit. But, it does. Being able to see that progress helps encourage us to keep moving forward, because we've seen how far we've been able to come. Next slide, Tom. So now the part you guys are probably especially, hoping for: how? Where do we get the money to save? And it was important to start with this focus of, what are we saving towards? Because realistically, we do need a goal to work towards. We need something to be aiming at with the goals. But now, it's about getting the tools to make those goals a reality. So some extra things, a lot of times people do ask the question, where do I save? Where do I get this money? And a lot of us are paid bi-weekly. That means we get paid every other week, which comes out to 26 times in a year. 26 times in 12 months means 2 months of the year you get 3 paychecks. And, for a lot of us, we survive pretty well on 2 paychecks for the majority of the year, or at least, not necessarily that we're living the high life, but that because we're able to survive on the 2 paychecks, per month for the rest of the year, that's an opportunity to be able to save those extra paychecks rather than spending them. Okay. Another, way that we can save is as we work to pay down debt. That's actually, I believe, tomorrow's Utah Saves Week topic, is paying down debt. As we pay down debt, it allows us to save more, because the interest we no longer have to pay as we lower the balance of our debt. It frees up our income, and it gives us more flexibility to be able to save. And then if you get a raise at work or you get a bonus, a lot of times we can be tempted to say, okay, we got a little more flexibility in our budget. But if we instead say, okay, we're surviving on our budget, let's put this away as savings to help us achieve our goals, whether that's, again, the emergency fund or saving towards a home or retirement or whatever it is, putting that away instead so that the rest of our budget isn't affected by the raise, but our savings starts to increase. That's one way that we can save. Next slide, Talon. Another way we can look at ways to save is one that Talon, well, actually all of us at Fair Credit really like, is this idea of the step down principle. The idea being that as we're looking to save, I mean, nobody wants to give up all of their fun. And I get that. Okay. But as we're looking for ways to save, it doesn't have to be that we're giving up all of our fun. Sometimes it's just a matter of evaluating, okay, do I want to spend full price on something, or will I be happier being able to save the money and taking a step down, on the price? So for example, if you want to go watch a movie, do you feel like you need to go to the movie theater, whether that's every time or just occasionally? Or do you, and if so, maybe you consider going on a $5 Tuesday to save you some money. Or if, you're not as set on going to the movie theater for this one, especially when you keep in mind the goal you're working towards, maybe you rent it from Redbox instead. Sometimes it can be harder to wait for a movie to come out on DVD, but I've done it a number of times. It's doable. Yeah, everybody may talk about it a little bit first. You just say, no, don't spoil it for me yet. And then you watch it on Redbox and it saves you the money. Or also what my wife and I have done is, rather than spending the money on the movie tickets, buying the movie if it's a movie that we'll like. And then also you can always try to borrow a movie from a library or family member or friend, and taking that even further to save some money. And the thing is, you can apply this to so many things. I have had people apply this to cans of corn at the grocery store. Okay. And the thing is the more you apply this step down principle of being like, okay, well, these are ways that I can step down and spend a little bit less. It helps to save money, and it adds up. At first, it may seem like just a few cents here and a few cents there, but then it starts to add up and you end up with a lot more. And so, that's why we like this step down principle so much, is because it is so versatile in how you can apply it in helping you to find ways to reduce what you're spending on different things and save more money. We had a question under borrowing a movie. You can also check. Yes. Okay. Yeah. And that's right. You said that just before I mentioned the library, but yeah, my wife and I, we have borrowed from the library a number of times. It's very nice to do. So some other things, just to help with ideas on how we can save. Comparison shopping. This is something that does take some extra effort, especially up front. A lot of times marketing, stores, companies, they get us purely on convenience, purely on, oh, well, I know the name brand, or, oh, it's right here, it's the easy thing to grab. But have you ever noticed how expensive some of the easy to grab things are? It's definitely something to consider. And while quality is definitely something we want to look at, this is part of comparison shopping. Is the value different? Is one cheaper than the other? If the value is not a significant factor, do we want to save that money so that we can then spend it or save it towards something that means more to us, towards that savings goal? And you can look at so many different things when comparison shopping. The key is, don't get overwhelmed. Start where you can. Start with something small, getting used to it, and as the more things you comparison shop, the more you'll get a feel and a know for it, and be able to say, okay, well, I know that this is better, this is cheaper, I can save money by buying this instead. And I can't tell you how many times my wife and we have benefited from that. Yes. We have Beverly mentioned that, multi-meal commercial, um, the savings are on the bottom shelves usually. Yeah. Name brand on cereal versus off brand on cereals and oatmeal. Definitely. And, that comes to another thing on one of my other slides, buying in bulk. We have bought oatmeal in bulk and it has lasted a long time and saved us a lot of money in that way as well. And yes, you're right, Beverly. Checking the unit price is another part of comparison shopping. One other thing with comparison shopping, just to bring up before we leave this slide, location. One thing we do want to be careful of when we are looking at savings is we don't want to just look at the physical dollar of the items we're buying. We want to look at the overall cost, because this is something that, we have to find a good balance for. If we're spending all day running around to 10 different grocery stores just to save a few pennies here, a few pennies there, chances are we've spent those in gas and time, and so we do want to be aware of that as we comparison shop and as we look around. Is, sometimes it's a matter of, okay, is it worth the savings? I mean, my wife and I, when there's something on sale at a store we don't usually buy from, we'll try to see, okay, what else can we get there to reduce the number of trips we're taking and maybe even prolong, another week before we have to go back to the store we usually shop at. And so that's, one thing that we do. Talon, next slide. And actually, next slide, because we talked about some of that. But, again, comparison shopping, looking at the quality. And one thing that was on one of the last slides that I forgot to mention is, as the price of something goes up, the more you need to be spending time doing the comparison shopping. This is especially key on things like cars, because they are expensive. And I mean, same with homes. The more expensive it is, the more we want to comparison shop. So onto this current slide, buying in bulk. It's another way we can save, but we also, again, there's a balance that we have to be aware of. For example, my family and I, we love olives. We do not buy olives in bulk, even though it technically saves money. It doesn't actually save us money because, sorry guys, because for us, when we buy olives, we just go through them faster if we buy them in bulk. Whereas if we don't buy them in bulk, we try to make sure that it stretches a little better. But at the same time, there are things that we do buy in bulk. I just mentioned, we buy oatmeal in bulk, and that helps to save us because we can buy a big bag of oatmeal, just cook it up ourselves. Yeah, it's not the little fun flavored packets, but we can flavor it ourselves with jams and things. So, considering that as an option to help you find ways to save. Talon, next slide. And this very much relates to comparison shopping, is the need to shop around. And I want to really stress this because this is something that we don't always think of when it comes to trying to find ways to save, is shopping around for, different things like utility services. Now, some places don't really have that option. Some places it's you use this utility company or you don't have utilities, but when we should always be looking at things like that just in case to see, do I have the option of shopping around? Do I have the option? I mean, where my wife and I are at, we really only had one option for internet, but because we were looking to see if there were other options, we actually found a good deal, and the company honored that first year deal on savings for internet. Because we had been looking around and trying to shop around, we had found that coupon that allowed us to get much cheaper internet and saved us a bit of money in that first year. Okay. And I mean, it's the same thing with insurance. We want to shop around. We want to look at different things. If it's health insurance, are we, looking at the deductible and the premiums? What does it cover? Medications, shopping around to make sure that we're getting things that meet our needs while also are the most cost efficient for meeting our needs. And the same thing does also go for bank and loan products, as well as the groceries and gasoline, which, those bottom two are the ones we typically think of, but we need to look at all of them as well. Next slide, Talon. Thank you. And then one of my favorites, I've actually had some friends who very much are against secondhand shops, but I can attest, there are some things you don't buy at the secondhand store, but there are a lot of things that you can, and it can really be an effective way, to save money. I mean, I just told you, my wife and I, we bought a car used last year, and I'll just tell you, it wasn't well, it basically was. It was a secondhand shop for cars. And we were able, with doing our research, comparison shopping, looking around, we were able to get a good car for under $4,000, and the same thing can apply with smaller things as well. I mean, I have had so many shirts and articles of clothing. Sometimes, I mean, we've even bought shoes cheap at the secondhand store just to be able to last us through, especially when we were students and money was tight, to last us through long enough till we could save and feel like we could afford to buy, shoes that would last a little bit longer. And so, benefiting from that, utilizing consignment and, secondhand shops, thrift stores, KSL and Craigslist. So many purchases happen on things like Facebook Marketplace, which works similar to KSL and Craigslist. Diapers. Oh my goodness. If you have kids, buying and selling secondhand, well, okay, I shouldn't say secondhand, unused diapers because the kid got too big and no longer fit in the diapers. We've done that a number of times. But also, kids' clothes, buying and selling secondhand kids' clothes. The kid's outgrown it. The parents are ready to get it out of the space. And it's a great way. We have gotten most of our girls fairly nice looking clothing, secondhand use. And we've saved hundreds of dollars on it because, we utilized these kinds of resources. One in particular that we liked when we were up, when I used to live in Cache Valley, is called the Divvy Up, but I know there are other similar ones, all around. So just looking for those kinds of places is a great opportunity to save. Talon, next. Thank you. And another part of this, again, we're trying to be intentional with, what we're working towards. And so we want to be intentional with our shopping trip. Back to the other comment of reusing things. Ellen just shared habitats, furniture, furniture, is a great opportunity to buy used furniture, and so looking at that rather than getting the nicest, newest thing. I mean, that kind of does speak to a part of our culture and our society that often tells us, have the nicest thing, always be spending all this money to be happy. But realistically, and every time I hear somebody say, oh, I just wish we had money for this, and then, if they're spending money on something that is just a convenience, or that they were told they had to spend the money on in order to be happy, I just think, why not save some of that money, getting it, going to the restore, going to the thrift shop, in order to be able to then put that money towards the goal that you actually care about. Okay. So back to planning our shopping experience, again, we want to have a plan. We want to have a plan for our goals. We want to have a plan for our shopping trip. I love using a grocery list, and I have had so many people tell me how successful and how much it's changed the way they shop to use a grocery list, because you go with the list, you're intentional, you know what you're there for, and if you show the discipline to stick to the list, you gain power over all the marketing that's trying to say, oh, in order to go get the eggs, you have to pass all of these sweets and treats, and you're able to walk out of there, being intentional. You can be faster with your time and save money because you knew what you needed to get, you stuck to the plan, and it helped you, to save that money. And as part of, planning that, you can look for coupons. There are Groupon and Honey and just different coupon places that you can use. Honey is specifically the one that I've heard of for online shopping, but looking at coupon options for buying things as part of planning your shopping trip. We want to make sure that we're intentional and not just going off, the fly. We want to have a plan and be intentional so that we can optimize our finances. And it is okay to reward ourselves as we're saving, as we're working towards, our goals. But again, it's something we don't want to over reward. For example, if one of your goals is to save an emergency fund and you've never saved before in your life, and you start by saving $50 a month, you don't reward yourself at the end of a year of saving $50 a month by spending $200, because that undoes 4 months of work. So we want to be intentional and not, yes, we can reward ourselves for hitting our mile markers, for reaching different stages of our goals, but we want to make sure that we don't overdo it so that we, undo a lot of our hard work. Next slide. Okay. So, hopefully those, are some good saving tips for you guys to look at and keep in mind. But just a couple of things with our services, as I've mentioned, Utah Saves is this week. And if you want to continue receiving, tips to help you save, go to utahsaves.org. Pledge to save. You can establish what your goal is that you're saving towards. You can put how much you want to save per month and how many months you want to save towards that goal. And then when you pledge, you put in your email and your name. It will then send you emails to remind you to save. But on top of that, it will send you links to articles as well as some tips and tricks in those emails that can help you with saving. So you can continue to get tips like the ones we just covered. That way you continue to learn and get new ideas of how you can save money and work towards those saving goals that you've always wanted to work towards. Okay, so that's the benefit of Utah Saves. So I really do, advise getting on there, utahsaves.org, and making that pledge so that you can benefit from receiving those email reminders and tips and tricks. Next, Talon. Another one of our services that I wanted to cover in a little more detail is our IDA program. For some of you, the savings goal you're working towards is more of a big one. Saving for school, saving for a home, or saving for a business. And the IDA program can help with that. This is a match savings program. So what it is we currently have a 2-to-1 match rate, which means you can save up to $1,000 that'll be matched with 2-to-1, so $2,000 for a total of $3,000 towards, home, education, or starting or expanding your small business. And you can save anywhere from 6 months to 36 months. So 6 months, half a year to 3 years. And in regards to the savings, as long as you set that you're going to be saving the same amount each month, but it can be as low as $15, or it can be as much as, reaching whatever that $1,000 mark is. Well, reaching that $1,000 mark in whatever time frame you choose to save. That's kind of the stipulation there, is as long as it's more $15 or more per month. And so it can start small. It can start with you can do just the $15 a month in order to save towards those towards those funds and being able to use it towards a home, education, or small business. Yes, so I believe there was a question which Ellen answered, is it only available in Utah? There are other programs outside of Utah, but they typically are by state. So, our program is just for those in Utah. Prosperity Now has a website, page where they actually show all the ones in the nation, and those in other states can look that up there. So back to the IDA accounts. Talon, would you actually go to the next slide? Okay, so as I mentioned, you can save towards a home, first time home, starting or expanding small business, or paying for education. Just really quick before I move on from this, education. This can be at a college or university, but it can also be at a vocational school, technical school, as long as it is, accredited by U.S. Department of Education, then you can use the IDA funds towards that. Okay, so it is a good way to help you get, pay for that education to help you in your career. Just keep in mind that the funds cannot be used towards debt. They have to be used towards current expenses. So a current semester that you're paying for, or home you are in the process of buying, or business that you're starting. So or expanding, just as long as it doesn't go towards business debt. Next slide. So somebody asked, how do you go about getting into the IDA program? Well, one of the first steps is, take our financial education classes. We have a spending plan and savings workshop and a credit and debt workshop that you can find on our website. So again, it's the spending plan workshop and the credit and debt workshop. You need to take one of each of those classes. So the 2 classes, it's about 6 hours total of financial education. They're 3 hours each. And once you completed that, then you can reach out to me, which I'll give my email when I'm, at the end of my slides. And I'm the IDA specialist, and we would get you started on the application process. With the application process, just some things to know with the eligibility. You do have to be living in Utah. You do have to be a legal adult. You do have to have earned income. This is something, we do have to be able to show that you have earned income for the last 3 months leading up to your application. And then you cannot have more than $10,000 net assets. So this can exclude 1 home and 1 vehicle, 1 car. But, this includes anything in monetary accounts, including retirement accounts, but also minuses all debt, not attached to the home or car, the exempt home or car. And then that's the number that needs to be below $10,000 for eligibility. So, that's the IDA program. Feel free to reach out if you have more questions, but it's a great program. And I love getting to work with these savers and seeing them as they are progressing on their savings journey and, learning to save more, both through the program and through the coaching that we do with the program. Next slide. Actually, I had another question about the IDA program. So if you have been in the IDA program before but not been able to use your funds, then you can reapply. If you have been able to use the funds, then there's a chance that we have to give priority to those who have not used the funds before. But you can always reach out and talk to us about that and the potential of reapplying, to the program. One of our other savings programs is our opportunity accounts. This one isn't quite as exciting as the IDA program. It's not a match savings account, but this is a good way to start saving, especially if you're struggling, with getting in past check systems into a bank account. This can help. It can't get past fraud, but it can get past a number of other things on check systems. But also, if you just need the accountability of saving without pulling it out for Friday night pizza instead, the opportunity account is a great way to go with that and to get started so that you can start putting something away, whether it is, really for anything. The opportunity accounts have the flexibility of being for whatever goal it is that you want to work towards, whether that's saving towards a home, saving towards a car, saving towards, a vacation, whatever it is, because it's not a match savings account, it has that greater flexibility and allows you to have, more accountability with making sure that you're saving each month. And that, just so you know, that does also need to be at least, $15 per month, but that one can actually fluctuate from month to month. But, just another program that we have available. Next. Okay. So, you'll see this again at the end of our presentation, but here's just our information to contact us about, our programs, especially our savings programs. I'm happy to answer any questions about that at the end of our webinar. But then just also so that you have that, I am putting my email in the chat, and then we can turn the time over. Sorry, I just realized I did have another question that I missed. So is there still an hourly wage restriction? Yes, you do. It's not necessarily an hourly wage, but there is an income limit. You can't be over 200% federal poverty level for your household size for the IDA program. So great question. I'd rather answer that now, than have somebody go through the application process just to find out. So yes, there is the eligibility requirement on that end. You cannot have, your annual income cannot be above 200% federal poverty level. Okay, so there's my email if you have questions about the IDA program, but also, I'll be answering questions at the end just in general about savings as well as our savings programs. And thank you guys for your time.
Thanks, Ben. We'll turn the time now over to Melissa from America First Credit Union. Thank you again for being here, and let's all give her our warm welcome and attention.
Thank you. And if you could just, it's blocking me from sharing my screen. If you can allow me to do that, I'll bring up my PowerPoint.
Alrighty, you should be able to, perfect.
Okay. So thank you for allowing me to come today and participate in Utah Saves Week and talk to you a little bit about some savings essentials. A little bit of this might be somewhat of a repeat from Ben, but I think we're expanding upon things a bit. I work for America First Credit Union. I am a financial and credit counselor. I've been in this role for about 14 years, and I've been with the credit union for 29. So I've served a variety of roles in my time here and serving our members, helping them best utilize the products and services that we provide. So today we're going to talk about the savings essentials. One of my favorite excerpts, I guess you would say, from our mission statement is our mission is to provide personal financial services of a superior quality to our member owners, our chief concern being their financial well-being. You saw that terminology at the end of Ben's presentation, and it really is an important one. A lot of times when we talk to people, we talk about trying to achieve financial success. Well, what really is financial success? It can mean so many different things to so many different people. But financial well-being is really a more clear concept of, I think, what we all are trying to achieve. Financial well-being is really having sufficient money on hand to pay for what we need. So the important things, food, shelter, transportation, saving for the expenses that we know are coming up. We need to have clothing, and that needs to be replaced as it wears out. We need to maintain our vehicles and our homes. We know that Christmas is coming, and it comes at the same time every year, so we need to plan for that. Having savings for things that we can't expect, but are pretty sure they're going to come up at some point in our life, like a car accident or a hospital stay, maybe something happening with your home, like your basement flooding. Saving enough to pay for some of the things we want. Something like a vacation, a new TV, a fun recreation vehicle that we'd like to have. So savings really, you'll see that is on here 3 different times. It really is a key component to being financially well. We are going to deal with money for the rest of our life, whether that's cash, virtual money, Bitcoin, we're going to be dealing with it our entire life, and we need to learn how to manage it and have it work to our benefit. So there's a few things that we can do. Like I said, savings is essential in maintaining financial health. We can't always just say, when I have extra. I deal with clients on a regular basis as well. I do individual appointments, meeting with our members, doing counseling sessions. And a lot of it revolves around budgeting. We can't talk about other goals and things like that if we don't make sure the budget's in order. And a lot of people say, well, when I have extra, I will save. And we kind of have to get out of that mindset, because savings needs to be a part of your budget, not an afterthought of your budget. Saving for things like a vacation maybe can be on the afterthought side, but saving for clothing or an oil change or new tires, those are essential. And we have to incorporate that into your actual budget, not just when you have extra. So there's a couple different strategies when we talk about savings. There's short-term savings, there's long-term savings. So I want to talk a little bit about each of those, and then maybe some products that you could consider when you are looking to put some of this money aside, and where it can work best for you based on what your goals are. The products that I'm going to talk about today are mostly geared towards products that America First offers. However, most financial institutions have comparable products. They may be under a different name, but it's a very comparable product to what we offer. So short-term savings would be money that you might plan to use in the next 12 to 24 months, okay? Periodic or expected expenses are definitely short-term savings. Ben had one of his slides, I noticed, had talked a little bit about periodic expenses. A lot of people don't really understand what that is. Periodic expenses are the things we definitely need to make sure are being incorporated into our budget on a regular basis, on a monthly basis. But they are the expenses that may not happen every month, but do come up throughout the year or every couple of years. And so we need to be setting aside money for them, like I said, within our monthly budget, so that it's there when we need it, so that we don't have to put it on a credit card. One of the things we don't want to do is work to get your credit cards paid down and then have the debt come right back because you put Christmas on there every year, versus saving for it. So periodic expenses are usually have specific dates that apply, or kind of general timeframes. Things like Christmas, always the same time every year. Your car registration is due the same time every year. If you're planning a family vacation, you have a very specific date as to when that's coming up. So those are things that we want to consider. And some products that you can look at are things like certificate accounts. A certificate account is going to be something where you put in a designated amount of money. You put it in, you agree to leave that money in there for a certain period of time, anywhere from 3 months to 5 years, whatever you designate. And then we pay you a higher rate of interest because you agree to leave that money in there for that period of time. So it's kind of locked in there. Now, of course, on this product, it's your money, and if you need it, we're going to allow you to access it. But usually there is a penalty for pulling money out early from a certificate account. I like that aspect just because I think it makes it harder for us to actually, kind of dip in there and say, oh, well, I just need a little bit for this, or I need a little bit for that. If it's locked in there and there's going to be a penalty, it makes us stop and think about that penalty. Do I really want to pay the penalty? Do I really need that right now, or can I wait? Our dedicated savings account is very similar to a certificate in the fact that you put the money in and commit to leave it there for a period of time. You get the same higher interest rate that we pay on a certificate account based on the length of time you leave the money in there. But the dedicated savings allows you to start that account with no money down, no money on deposit in that account. But it does require that you make an automatic transfer in there at least once a month for at least $10. You can do however much you want. You can do $50 twice a month, or $50 each time you get paid, or you can do $100 once a month. But it's kind of a nice way to have automatic savings coming out and going into this fund that's actually earning you a higher rate of interest. For things that have the very specific date, it's kind of nice because you can say, okay, if we're going on vacation in 6 months from now, I can set up a 6-month dedicated savings. I can put money in, and then I can have money come out of my checking account each month when I get paid, so that I make sure that that vacation is funded when it comes time. So that's a couple of products we have there. Sometimes we have things that do not have a specific date. So it's kind of hard to say, I'm going to put it in for 3 months or 6 months. And because we might need access to that in between. And if it is something that you're going to need access and you don't really know when, then maybe it doesn't make sense to put it into something that would penalize you for pulling it out early. So things like clothing, you never know when you're going to break the heel off your shoe, or you get a rip in your pants and have to buy new ones. We may not know when medical expenses are going to come up specifically, or car maintenance. We know it's going to be in the next little bit, but we just don't know exactly when. So for those, I would recommend putting money into an account that's more accessible. You want to move it out of your checking. We don't want to leave money in our checking just to sit there, because when it just sits there, it disappears. Our brains say, oh, look, I have extra money in my checking that I can spend. And guess what? We spend it, when really it maybe had a designated purpose. So you do want to put it somewhere that is separate from your regular funds. So just a general savings account is a good option, one where you can make deposits as often or frequently as you like, as well as you can withdraw from there when needed without any penalty. We have a second account that we utilize here at America First. We call it our money market savings account. And it is basically the same as a general savings account, but it is tiered. So the more you have on deposit, the more you can earn. So as you start to build the balance in that account, we'll pay you a higher rate of interest. Like, $0 to $4,999, you're going to get one rate. Where once you're over $5,000, that rate might double. Now, disclaimer, rates are not fabulous right now on savings products. What you have to understand is that loan rates and savings rates go hand in hand. So if we offer fabulous rates on loans currently, then we cannot also currently offer fabulous rates on savings. So if loan rates are low, savings rates are going to be low. If loan rates are high, savings rates are going to be a little higher. So it's still better to put your money into something that's going to be earning you something instead of just stuffing it under the mattress at home. So even though it's not earning a lot, it's still safe and secure. And we'll talk about that a little bit more as we get towards the end of the presentation, because we want to, sometimes we're tempted to go with like the stock market or, other investments. But we'll talk about why those might not be good for this type of savings, okay? All right. So long-term savings are going to be things more like money that you'll need in the next 3 to 5 years. Okay, we definitely want to save for emergencies. I think this last year has really opened a lot of people's eyes to we are all prone to emergencies and unexpected situations. And so, usually we can plan on, even if there's not a pandemic, we can plan on emergencies that generally are going to come up in relation to maybe our car, our home, or our health. We also may experience periods of unemployment. Many Americans have experienced that at this time. And typically what we find is even if you have unemployment, access to unemployment income, it's not what you were making. It's usually only a portion of what you were making. So we want to make sure that you're able to take care of things and cover your expenses if situations such as this were to arise. Other long-term savings might be down payment for a car or purchasing a car in cash, as Ben mentioned. Down payment to purchase a home. It's crazy. The majority of people that I am speaking to right now are really looking to purchase a home. They're saying, what do we need to do? How do we get our credit in line? How do we get a down payment saved? How do we know we're, looking for the right dollar amount to borrow? Because home prices or home interest rates are amazing. And so a lot of people want to take advantage of that. But I tell them, you need to come in with some money down. So we need to figure out, how can I start saving for that home purchase? And then, improvements on your home. We can't just expect, even if you buy a brand new home, you can't just expect that you are going to be in that home and never have to take care of anything. That's usually a big shock to people who have been renting for a long period of time, because your landlord fixes the toilet if it breaks or replaces the furnace if it dies. When you become a homeowner, all that falls on you. And so you have to be really careful and make sure that you are planning ahead to save for some of those things. Products that we can consider for more long-term savings, again, are very similar to some of the things we talked about with short-term savings. You can look at the money market savings, which is the tiered savings. As you have more on deposit, you'll earn more interest, and you can access that money without any penalty. You can look at putting money into a dedicated savings, where you're making an automatic deposit every month in there and allowing it to grow over a period of time. Or certificate account, where maybe you do get an extra paycheck or a lump sum, cash influx from like a tax refund or a bonus. Certificates allow you to put that lump sum into that account and let it sit and grow until you need it or until the period of time expires. So those are some products that America First offers. Other long-term savings we can talk about are things that might be, 5 or more years down the road, depending on your situation. You may be wanting to save for your children's college education or your own. There's a lot of products to consider. We offer what's called the Coverdell Education Savings Account, where you can put money into the account for the benefit of your children's education. It grows tax-free, so that as long as the money is withdrawn and used for educational purposes, there is no taxes paid on the interest earned. It's very similar in that respect to a 529 educational savings plan. I think the difference I can tell you in that is our Coverdell Education Savings Account does have a cap of $2,000 per year deposited in each, the account per beneficiary. But it is insured by our federal insurance. You will never lose that money. It will grow with interest, depending on what product you put it into after you set up the educational savings account. The 529 is a little different in the fact I believe it has a higher deposit limit, but it is more of an investment into kind of a fund where you can determine where you're investing the money, but you're not guaranteed a specific rate of return. I know there's still amazing accounts. My children were fortunate enough to have their grandparents set up a small fund for them, which has helped them with their college education. But yeah, they never really knew exactly how much it would be in the end. It's going to fluctuate with the markets and depending on where you choose to invest those funds. The My 529 savings plan, my529.org, was mentioned earlier by one of our participants. They are, for Utah Saves Week, they are running a promotion. So make sure you check them out and see if that's something that fits your needs. Okay. You can also do the dedicated savings account. Again, a lot of our savings products can transition for many different types of savings needs. Retirement is another long-term savings goal. Number one, we always encourage our clients, members to participate in their employer-sponsored program if possible. Most employer-sponsored programs, such as a 501k, will match your contributions, which is amazing because you immediately get a return that you may not if you were just, putting that money somewhere else. So we always encourage you to check that out and participate, contribute what they will match, because it's a good option for a lot of people. If your employer does not have a 401k or an employer-sponsored retirement program, you can also set up an IRA. That is an individual retirement plan, and that can be set up at your banking institution. It can be set up through like investment brokers, things like that. There's traditional that would give you a tax benefit now. And then there's a Roth that gives you a tax benefit when you withdraw. So there's a lot of different options for saving for retirement. And it's something to think about. The sooner you start that savings, the less you can contribute up front and reap a bigger reward. Okay. Annuities are also options for retirements, and those are usually set up through investment advisors, investment brokers, and they are where it is an investment and it will pay you out over time, annually or monthly, depending on the product that you choose. But there's lots of products out there for retirement. And then home improvements. Like I said, if you are a homeowner, you have to take into consideration that you are going to have to maintain that home. And there are going to be some more expensive things down the road, besides the toilet or new paint or carpet. Eventually, if you're in your home long enough, you may need to replace the windows, you may need to replace a roof. And those all come out of your pocket. That's generally not something that's covered by an insurance plan because they just wear out over time. So again, you can look at something like a money market account because we don't know exactly when you're going to be using those funds. But if that money is growing, then you definitely want to get the best rate of return possible. You can do a dedicated savings where you're having an automatic transfer happen each month or monthly, or you can do a certificate account. I know that with us, we started with a money market savings that we were putting money into, and then we're like, okay, we're finding that we're very, consistently being able to put $100 a month into this fund. So now we're going to take the money we put into that fund and we're going to put it into a dedicated savings so that we can earn more interest, and we're going to have that automatically now come out of our account. And once we hit a certain amount that we felt was kind of our target number to have saved for our home, then we put it into a certificate. So these products can evolve over time. We have amazing representatives at our branches that can talk to you about the products that fit your needs based on your situation. Every person's needs are different. Every person's, uh, risk tolerance is going to be different. And that's what I'm going to talk about next here really quickly. There's a few things you need to consider when you're looking at kind of a savings product for your money, right? It takes a lot to earn that money, and we want to make sure that we are putting it in the best place for our needs and our goals. And we want to make sure it's safe. So number one, the thing we want to consider is risk. Are you putting it somewhere that's safe? Is the institution or the organization providing you with this savings product insured? Banks are insured by FDIC, credit unions are insured by NCUA, where even if we went out of business, your money would be safe. You would get your money back. There is no chance that you would lose the money you have on deposit. Okay, that's not the same everywhere. If you go to some of these other providers that are not covered under the FDIC or NCUA insurance, you need to make sure that your funds are safe and that they're guaranteed. Okay. You want to know what the rate of return is. Is it fixed or is it variable? So is it going to stay the same over time? Will it adjust over time? Will it stay the same for a period of time and then adjust? Those are definitely things you want to know before you put your money into a fund. And then you want to know, how am I going to get paid that interest or dividend? Is it going to pay monthly? Is it going to pay quarterly? Is it going to pay annually? That can make a difference in how much you earn over time as to when that money is paid. The other thing you want to make sure you ask about or are aware of when you are choosing a product is, how accessible is it? We talked about those couple of products, the certificate and the dedicated savings, that are actually locked in for a period of time. So you want to know, can I withdraw from it at any time? Or if it is locked in for a period of time, how much time do I have when that expires to make a change? If I withdraw early, what is my penalty? How much would that be? You also want to know if it's something you can make deposits to. So our certificate account, you start with a lump sum, and that's all that's in there until the term is up. You cannot make deposits, but the dedicated savings, you can make deposits on top of the automatic. So those are things you would want to know and questions you'd want to ask as you're setting up and choosing a product. All right. So I don't know if you guys have any questions. Like I mentioned, we at America First do have a wide variety of products and services that we can offer you in assisting with your financial and savings goals. If you're not a member of America First, I'm sure your financial institution as well has a wide variety of products and services that can meet your needs. Hopefully this has helped you kind of think about the different avenues that you can go in putting that money aside. I didn't talk about investing. I didn't talk about the stock market or mutual funds or things like that, because my general advice, number one, I'm not a financial advisor, so I can't really give advice on that. But there is the appropriate time and the appropriate money that you can designate to investments in like the stock market and mutual funds. But that's variable. You could earn a lot or you could lose a lot. When we are talking about the money that you have for specific goals or specific needs, you want to make sure that you are not going to lose that money, that you are going to get back at least what you put in plus some. And so I didn't touch on that today. Those are options out there. I feel like you kind of want to cover your bases in these areas first with safe, secure savings products. And beyond that, if you're looking for additional retirement income, or if you're looking for other ways to invest, then there are great products and services out there as well. And you would want to make sure that you're working with a professional financial advisor in those circumstances to make sure that you know what you're getting into. Okay.
Well,
I'm
thank
here to
you,
answer any
Melissa.
questions.
Yes, it looks like there's a few.
Okay.
The most recent question was asked, does America First have financial advisors?
We do. We partner with the Credit Union Service Organization, CUSO, and we do have financial advisors that can meet with our members by appointment. There is no cost to meet with them. Some of the products that they provide or that people can choose to invest in do have a fee associated with it. But just to meet with them and get their advice and their recommendations, there is no cost.
Perfect. That's good to know. Thank you. Another question was talking about, and you probably touched on this a little bit, but there's a question. Can you also talk about the savings plan you have for rebuilding credit and saving $25 a month? I've talked about those a bit when in a branch, but I know you have a few different ones.
Right. So when we're talking about building credit, it's actually a loan product. We have what we call a credit builder loan, where it's usually a $500 loan. We loan you the $500, and immediately that $500 goes into your savings account with a freeze on it. And then every month, the payment is transferred out of that money to the loan. So it's showing that you are making regular monthly on-time payments, but it's not really coming out of your pocket. It's coming out of the money that was loaned to you up front. So you don't get that $500 to go, buy a new TV. It goes into the savings to pay the loan back.
Perfect. And then someone just asked, is that secured?
So there's kind of a couple, I'm not really sure what they're asking on that. I mean, you put your own money. No, so we have, there's two different types of products. The credit builder loan is really for those people who have not money that they can put up themselves to secure the loan, but need a way to, build their credit. So the credit builder loan, it's called a secure loan when you look at it on like a credit report, meaning that there is money that's being held as collateral against it, but you do not need to put up your own money. We have a different loan product that can also be a credit builder, and it's more for people who do maybe have an extra $500 that they can put in their savings and not touch. And that's called a share secured loan. And it works pretty much the same. With the share secured loan, though, usually because you're putting your own money up, you usually end up with a better interest rate than on the credit builder loan.
Perfect. Thank you. Are there any other questions from the audience? If not, oh yes, there is. If you would like to unmute yourselves during this time, you're more than welcome to, and we'll take those questions that way to save your fingers from typing.
Generally, our financial advisors are able to travel from one branch to another. So if we're talking about the investment advisors, then yes, you would call and schedule an appointment and they can meet you at a branch that's convenient for you. The financial counseling services that I offer, we do not travel. And those we are actually doing virtually or over the phone right now.
Perfect. Thank you. Other questions?
I have a quick question. The opportunity accounts that Ben was talking about earlier, is that similar to what she's talking about as far as dedicated savings accounts? I'm sorry, I wasn't able to read the screen that he had up.
No worries. Ben, I'll let you touch on this.
Yeah, it's a great question. I'm not sure if they can be directly correlated as the same, but they are definitely similar. I mean, it's so how the opportunity account works is it's a joint savings account with Fair Credit that just allows you to have that accountability of putting that money into the account each month, especially if you are having a hard time getting past check systems. But you know you've got the accountability of you can't just pull it out whenever, you not that we try to hold it, against you, it's your money, but you just have to contact us for it. So it just adds an extra step in order to be able to pull out those funds to just help deter, from the temptation of taking money you're saving towards a car and putting it towards, something, like Friday night pizza instead. And so they have, I mean, from my understanding, they have similarity, but not necessarily exactly the same. Did that help?
Yep, it looks like it did. Perfect. Any other questions? If you do have questions, you can see on your screen for America First. You can always give them a call at that number listed. As far as Fair Credit, if you have questions, you can always reach us via social media, at our website, or by calling us. And we are just so grateful again for Melissa and Ben, their thoughts and messages today. And we want to thank each of you for your attendance today. Uh, Stay tuned for upcoming webinars that we'll be putting out, and we hope to have you again soon. Thank you again, everyone, and enjoy the rest of your evening.